Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we review the bank reconciliation process. In session 23, it was such a rushed process that 20 minutes wasn't sufficient. Now, in this session, we are having another brief look at the bank reconciliation process. Remember, bank reconciliation is aimed at ensuring that the transactions on the bank statement and the balance on the bank statement do agree with what we have on the bank account. Or rather, it is the other way around, in that we can adjust the bank account transactions, but we can't adjust the bank statement transactions under normal circumstances unless we can prove to the bank that there is an error. It's more often that there is an error on the bank account than the bank statement. Now, we said that the reconciliation process is the same for a credit card, loans, and a hire purchase. We normally get statements for these three from, now this is from the credit card company, and this is from the loan company and hire purchase business or company. Now, we also have reconciliation for the creditors and debtors, whereby we reconcile the control account with either the debtors ledger or the creditors ledger, and that is discussed. Actually, the creditors reconciliation is discussed briefly in session 19. 20 has not been looked at because this is supposed to be a quick overview, and it's aimed at small businesses which most often don't sell on credit. And then lastly, we said that cash reconciliation is the simple process of confirming that the cash available agrees with the balance on the cash account. That is the simple process of cash reconciliation. If there is a difference, then, okay, if that difference is a shortage, then whoever is in charge of cash should top it up, unless we can confirm there is an error somewhere. And if there's a surplus, could be an error somewhere, could be an error that should be investigated. Now, let's go back to our reconciliation process. Now let's have our bank statement on the left. Let me drag this. It's not moving. God, why isn't it moving? It normally moves. Oh yes, I wasn't handling the right. Okay, now this should be our bank statement. Okay, now we come to our software device and we go back to the reconciliation form. So we are in miscellaneous module 2. Click periodic tasks and reports. Scroll down to P3, which is the bank reconciliation form. We select the account, which is account bank 1, and that is month 12. Remember, there are no transactions for the other months. Okay, now there is a 4 here by error, but otherwise we oh yes, yeah, when we're deleting, we forgot to delete that one. Now, should we change the orientation? Probably not. I think we can manage here. Oh dear. Should manage here. Okay. Though here it gets a little bit small. Maybe. Should we change the orientation? Okay, let's try to change. Let's try to rotate the device. We should. Okay, this is much better. Okay. Yeah. Now what we're going to do, we start with the opening balances. Where do we drag this to? To the left, yes. To the right, rather, to the right. Okay. Now we need to ensure that the opening balances do agree. So we type 4445 here. So 4 and then a 5 there. And then this way, closing balance, yes. Statement is 777 4.5. God. Okay. 777.4.5. Okay. And let's click on the device. We want the keyboard to disappear. So now we are saying that these transactions, the difference here should be a 0 at the end of the reconciliation process. Now the opening and matched balances, opening and matched balance. Okay, the opening balance and matched transactions, their sum is 445. At the moment, it's only a sum of the opening because none of these below has been matched. All right. Now we don't need to remove these. We're just doing a recap. Now we're going to match 400, and as we do that, that balance is going to change, and the reconciliation process should only end after we have a 0. If we don't have a 0, then reconciliation, that means checking and finding the cause of difference, continues. Then 15,180 is there. Then, okay, now let's first identify those without a yellow color. Then 12,000 is there. Then we have 40, we scroll down. Let's scroll down. Okay, got to use my finger. Now the 40 is below here, and we've got the 28 below here. Okay, now take note of the colors. All right, the one on Excel, this is the debit column. Now these are entries which reduce the bank account balance. Beg your pardon. Now this should go into just flight mode. Enable. Okay, let's continue. Okay, now below here, so we are saying that the entries in that column reduce the balance on the bank account, and the black figures do increase the balance. Those are credits. Now we shouldn't refer to the horizontal bank account because it's not being used here. Now we don't have a balance column here because we are using mobile devices. We don't have a lot of space. Now now all the figures here without a yellow highlight have been recorded, and that is what was originally found on the on the bank account. Now those with the yellow highlight were missing on the bank account in the software, so we had to record them. Remember, you following the normal process. Okay, this is the second stage. Now the first stage is identification and correction. If we find an error with any of these figures, we're supposed to click that one, number 9, or any of those numbers, which takes us back to the recording form, make the appropriate correction, close, come back to the reconciliation form. Okay, now these were recorded later, the ones in yellow. So we've got 100 in there, and that 100 in there. We have the 75, that 75 in there. We've got the 10 is in there, and then finally we have the £202.50. And as we speak now, the difference should have disappeared. That's how it works. If the difference doesn't disappear, then we still have to investigate the cause of difference. So that's how the reconciliation is done. Ideally, this is done on a monthly basis. If we stretch it beyond a month, then it's a very big task. So we check on a monthly basis. Once we are satisfied with the transactions for a particular month, we don't need to reconcile again unless some corrections or adjustments have been done on transactions affecting the bank account after the reconciliation was done. So that's about it. Now let's have a quick look at this side on this one. Now we are saying that identify matching records and make instant corrections. If we find any of these with an error, we just click that one straight and make an instant correction. For example, if this was the 31st, then we change the date to 31st. As simple as that. Okay, it's this way. We click 31st, and then set. We update. Now, when we come back here, we've got to select the bank account again, and then we scroll down to month 12, and there we are. Okay, so it says there's a zero difference in spite of the correction that has been done. All right, now the second issue is to avoid recording check stubs and deposit slips. Now you realize that we have been reconciling with the bank statement, which is on Excel in this particular case. You can reconcile against the against deposit slips and check stubs, but one, the process is going to be longer. Two, you're going to have a difference. You normally will have a difference because of what we call timing differences. So to avoid all that, which is not necessary, we follow cleared transactions on the bank statement. It makes work easier. There are people, I've heard of people who lose jobs because they can't reconcile bank statements. What is difficult with this? So this is the way forward. It makes it easier. And then the other issue to consider below here, of course, we update software records with unticked transactions on the statement. Update software records with unticked transactions on the statement. Let's have a look at this. Now, we found that the figures highlighted in yellow here did not have a tick. That means they are missing on the bank account. So they should be updated into the software following the ordinary procedure. This 100 is a loan repaid. We should use the right form to record it. Number 10 is bank charges. We use the right form to record it. And 250 is bank interest. We use the right form to record it. And after recording, we confirm on the reconciliation form that it was recorded properly. And then what does this say? Recording and reconciliation is only complete with a zero difference. Otherwise, the investigation should continue. And then let's have another final look at this one. The bank statement credit column. Bank statement credit column. Let's drag it. Can we drag it? No. Just 1 second. Bank statement credit column. Let's try to leave it here. Now, what is updated on the bank statement credit column? Credit column is this one. Is this one in black. In there, it's updated with bank interest. This one. We have what you call electronic receipts, payments received by the business electronically. Okay, yeah, received from customers who paid by debit card or credit card. If the business received a loan advance, it will appear in there. And direct credit. Direct credit and electronic receipts these days are kind of synonymous. There's not much difference. And then this debit column is updated with standing orders. Standing orders are periodic payments agreed between the business and a supplier that so much will be paid every month, every period. Then direct debits, slightly different from standing orders, but very similar, whereby the supplier or an authorized supplier takes the money directly from the bank account basing on an invoice, basing on a credit consumption as a direct debit. This could be done by electricity companies, gas suppliers. Then we have bank charges. In this case, we had £10 here. We have dishonored checks. And then we have loan repayments. That's the 100 in there. And then a credit card repayment. That's the 75. So that is what is updated on the bank account in the software. Well, that brings us to the end of this review. It has also been long. Apparently, bank reconciliation is important because it's aimed at ensuring that what is recorded in the software agrees with the bank statement. In case of any question, please send us an email or find us on Skype, Accounts Coaching, or Moses at DIY Tax Return. Thank you.